Hello traders, welcome back to our market analytics program powered by Light Forex Broker and partnered up with myself, Roy Kuzin, here to give you the best of the best, right? From market analytics to trading opportunities, all the way to educational sessions and training, which reminds me, don't miss out on next session. In 2 days, I'm going to introduce to you a very special, very unique trading strategy that is based only on market news, right? On economical news, the economical calendar. So it's going to be super interesting. That's in 2 days. Don't miss out on that one. Today also, I think we're going to have a very, very interesting session. As you can see from the title picture, we're going to have an in-depth analysis and discussion on the dollar versus the Swiss franc, which I believe presents a remarkably interesting opportunity right now. And just an hour ago, I pulled the trigger and established my first bullish position on this one. So we're going to dive in and check that out. But before we're going to go about the dollar Swiss franc, I want to have a bit of a follow-up on the euro pound. So we had already 2 sessions on this one, and today I'm going to close that euro pound conviction. We're going to have a closure today. So the first part, we're going to take it to the euro pound, and we're going to have a second follow-up, which is going to be the last one on the euro versus the pound. First video session was this was where I initiated that bearish conviction. That was the first time. That was on the 9th of January, guys. You can go ahead and look it up. 9th of January, the title was British Pound is set to outperform the Euro. That's where we started, right? Almost, well, about a month and a half ago. Later on, well, that was actually quite recently at the 19th of February, right? We had a second second session here. That was the first follow-up, which title was Brexit not so bad for the British pound. So go ahead and check that out if you didn't already. So I'm going to have a closure on that one just now. So are you ready? Let's go ahead and dive in. Alright, so there you go. Here's the euro versus the pound weekly chart, right? This is the big picture. And I'm very, very happy to announce that we are done with a very successful bearish position. Actually, there were 2 bearish campaigns. If you remember, first one was straight to 86.77, right? We pulled out. We've waited a little bit. We kind of gave price some time to for upside correction. It was a beautiful movement, very technically accurate. Price went straight to that 88.13, which was also a secondary target for us, because we started from here, from up above, as price was beginning to turn around, and we took a very, very profitable move of about a 400 pip, probably a little bit more, all the way to 85.31. Now the 85.31 was my primary price target, right? Even though I did set one more, right? I actually set one more. That was in the previous session. I actually wanted to keep a small part of my position and try to squeeze that move all the way to 83.90. I decided to close that part. So what I did was I got out of about 80% of my position when price hit that 85.31 and kept 20%, as I said. But then I noticed that price was having some serious difficulties in breaking through, right? Everything, you know, my condition here to carry on that short position was to see price manage to break through that 85.31 relatively easily. And that did not happen. As I noticed, as price was starting to turn around after touching base really nicely, by the way, right? You can definitely appreciate that. I decided to get out altogether, call this one out as a massive success, and just move on to the next one. At this point, it doesn't really worthwhile to try and take a relatively small, part of a move here, which is the end of the move, right? So obviously, naturally, it's more risky. So really, basically everything from everything below 85.31 is actually a lot more risky than up until that point. So I decided to close out this one, even though I do believe the price will probably continue to move south. The only problem is we can't say how deep this upside correction is going to be, right? Which is why I've lost interest at this point. But that was a hell of a ride, right? No doubt. Okay, so that's a closure for the euro pound. I'm probably not going to talk about the euro pound in the foreseeable future, but who knows. So let me, without any further ado, let me introduce to you one of my top favorite trading opportunities right now. It is the dollar versus the Swiss franc, guys. There you go. This is the daily chart. Now, the technical picture here is very compelling. I'm going to show you a few different technical elements that are perfectly in line, right? Which makes this trading opportunity very attractive as far as I'm concerned. Having said that, usually I like to identify those opportunities, those cases where price is in either one of the edges, right? Either one of the edges of my setup, right? My symmetric setup. So it could either be on the top key level or the bottom key level starting to turn around. That's pretty much the classic, the ideal situations that I'm looking for. But in some cases, I still find remarkably interesting opportunities, even where that's not the case. And that's not actually the case here, because price is not in one of those edges of the setup that it's trading on. It's actually trading roughly right in the middle part of it. As you can see right now, we're trading right here. Let me enlarge this one. So if you track back here all the way to the end of 2015, that's a massive trading range, right? We're talking about almost 4 years, right? I'm pretty sure we're gonna get that, we're gonna get to 4 year here, still trading inside the setup. But let me break down the legs, right? Let me break down the legs. Starting from the second part of 2015, that was the first leg, followed by the second leg. Then we had that third, which was 3 segment part leg. Beautiful one, by the way. Made it all the way to the very bottom key level, 92.35. Brilliant touch base here and turn around to generate the fourth leg, right? So the fourth leg was also a little bit complex. We had the 3-part segment, right? Straight to the higher section. That was just recently, a few months ago, price was touching base beautifully on the mid-high key level 101.18 and officially, declaring itself as a fourth leg fully completed. So it is very well established trading range. Already 4 legs are in play, but I would like to suggest this idea, right? So when price made it to the third leg, to the end of it, right? So the tip of the third leg was beautifully touching base here on that bottom key level, as I just mentioned, but also, very importantly, it took the previous lows. Take a look, right? And that was pretty significant in terms of, that was pretty significant margin, right? It took those two, the 2 previous lows by a large stretch, both in time and price. So usually when that happens, especially in a trading range, that means that it is more likely that price will do the same on the opposite side once it gets there, right? Which means, what I'm trying to say here is that I expect price not only to reach the upper section as it just did a few months ago, but actually push forward, break through that mid-high 101.17 and go all the way to the previous highs, just as it did with the previous lows when it was landing, right? Now, let me quickly show you which level that happens to be. So we're talking about 103.35. I like to give my price targets, you know, a green color. So yeah, we're talking about 103.40, 103.40. You can see the highest high here, 103.34. Here it's 103.43. So yeah, you can safely say that 103.40 is going to be my final destination in this bullish campaign, which I just initiated. Just pulled the trigger on the first portion, and what I plan to have a big size position eventually. As long as price will continue and move upwards in a nice fashion, I will keep increasing this position. Now, we've mentioned 101.18, right? 101.17. I call it 18, right? It's closer to 18. 101.18 here, that's still our main point of reference. So we're definitely going to address that key level as a secondary target. Although I do believe, you know, we're going to have a second attempt on this one, right? The first attempt was just checking that key level, right? Just the marking, the fact that it reached that key level. It wasn't surprising to see the pushback from that key level, which is a resistance, and it still is, right? Still a resistance. So what I think was happening here, let me take you closer now. I think once we met that 101.18 a few months ago, I think price started to it went for a downside correction. That's what it was, a downside correction, which ended. I think it ended. Now let's see if I can find something quite interesting here. Now let's see if we can find a good reason for price to come back so swiftly from that downside correction, right? So I've already prepared actually a simple Fibonacci 50%. Take a look. I'm going to give it a little bit, let's give it a different color for the sake of, of this analysis. All right, there you go, right there, right? And we can also mark it with a horizontal line that will give us, price tag. So there you go. This is the 50%, guys. I want you to take a close look at this really interesting stuff. We're talking about 98.35 spot. You saw me land that mark right on that last digit, right? 98.35, that's the level officially. That's the 50% Fibonacci, and we're talking about this move, right? Just the previous opposite move. We're trying to assess whether that was a genuine downside correction or not. And I want you to take a look at the close we had here, right? The first attempt to break that key level. Take a look at the close, guys. 98.36, right? 1 pip. And of course that mighty one with a huge spike. Take a look at that lowest low. It was trading at 97.16, more than 100 pip below that key level, but it came all the way back just to close. Take a look at the close again, 37, guys. Amazing stuff. I think that's a pretty good evidence that the 50% was playing the main role here of breaking that downside correction and sending price straight to its original upside move, right? Now that's important to understand, right? Because we're trying to figure out what is the medium-term trend here. And obviously now it's up. It ended that downside correction. I mean, take a look at that spike here, just magnificent hammer, right? What a lovely bullish hammer we have here, right on that spot. Beautiful. And price starting to reverse, obviously, and it took off ever since, no doubt. Now I want to take you to the local price section, which means the short-term perspective, right? Because right now we were describing the medium-term cycle. Let's talk about the short-term cycle. Now I will have to talk to you about just this recent upside move, right? Ever since that spike. Now let's measure this. If we'll measure this from the very bottom here to the very top, I think we can safely assume that what we had here in the last couple of weeks were also a downside correction, technical correction to this upside segment on a short-term cycle. Now why do I say that? Now here it becomes fascinating. I'm going to throw in two technical elements which I find to be very, very strong. First is the blue dotted line at 99.51, right? 99.51.5. This is, guys, the first most important, one of the most important, but the first important, well, actually the second important, but it is one of the primary Fibonacci correction levels, right? 38.2. Now, and here you can see how price is spiking that 38.2, bouncing back up, and now starting a visible turnaround, right? We see already some green when it comes to this week that we're trading here right now. This week starting to look pretty positive after bouncing off that key level, 99.51. Now we're going to take it to the daily chart, because this is becomes even more interesting. When we take a look a little bit back, we can see that that downside move that we were analyzing, right, we were analyzing this on the weekly bar, on the weekly chart. But if you take it to the daily chart, that same downside move, you can see that it was actually a very impressive head and shoulders pattern, guys. Inverse head and shoulders pattern. And this is a classic, very strong, actually very strong head and shoulders pattern, because the shoulders are very shallow in comparison to a massive head, right? That's very important. It's a very important element in the head and shoulders pattern. And of course, the shoulders themselves are pretty symmetrical, right, in both of in terms of length. So what is what's required at that point is obviously just to cross a neckline. So that's the black dotted line here, guys. Now I was actually very much involved in taking a bullish stance here on the dollar Swiss franc ever since I noticed that head and shoulders pattern, especially the moment of the break. Take a look at the break here, and it made it really nicely to the first projection level, 1.236, with regards to the head, right? So that was my cue to split, and I knew that I was probably looking at a short-term cycle downside correction, but the question was how deep it's going to go. So the reason I'm introducing this one right now to you guys, dollar versus the Swiss franc, is because I suspect, well, heavily suspect, that that downside correction, technical downside correction, is over. So we saw price lands beautifully on that key level, right? The 38.2 blue dotted line at 99.51. But also, guys, it's impossible not to appreciate the fact that it was also at the same time slicing the neckline from above. Really impressive stuff, right? Finding huge support. Well, you know what, let me retract that. Not huge support, finding support. We don't know yet if it's going to be huge or not. It could become huge if price will continue on the way up, as it looks like it does right now, but this is very, very early stages, right? Which is why I'm starting very small, just to test the water. I want to see price move away, continue to move away from that area, because this is the danger area, right? The 38.2 Fibonacci combined with that neckline, it's just interesting to see how price lands right on that neckline, spike it, find solid support, because it was just recently a resistance, and starting to turn around. So that's pretty much the situation, right? I find it to be really interesting stuff, and I decided to take action on this. So as long as price continues to move upwards in in a stable fashion, I intend to keep and building up that position. I'm going to use that 101.17 here as a secondary price target for partial execution, but like I said before, my intentions are to try and chase price all the way to 103.40. That's where the previous major highs, actually two highs, we saw that, are situated. So I think it's very likely that we'll have that chance. So yeah, now the only reservation I should have at this point, right, is if price comes back down, breaks below the neckline, breaks below 99.51. That's going to be my defense element here, my defense mechanism, if you will, because below 99.51 I'm going to look to close out, call it a loss, and close it out and move on to another, to a different trading opportunity. Right now, from the get-go, stop loss level, my stop loss level is at 98.50, pretty loosely, as you can see, and I will obviously adjust it accordingly if price will begin to lift off. But for now, this is it. There you go. Just pull the trigger, guys. Dollar versus the Swiss franc. I can only hope that I will come back here later on, just as I did at the beginning of this session with the euro pound, and have a wonderful closure to this trading opportunity. And that's pretty much about that. That's pretty much about today. I hope you enjoyed that session, guys. If you did, give us a thumbs up. If you didn't, give it a thumbs down. And till next time, be well.